I love these Saturday events. We can kind of kick back and kind of, without the markets going crazy like they have been, and focus in on a couple things here today. So what we're going to dive into is kind of what I kind of call ride the seasonal trend or ride the seasonal wave. So we're going to look at, using seasonality along with, momentum to give us, good directional indicators of direction and trades that we can set up that are really going to be higher probability type winning trades, adding the seasonality component to it. And then, by managing our risk, we're going to use, options and option spreads and pairs. So, this is going to be a really good kind of overview of how you can incorporate this into your current trading or add to it, or start doing this full time. So that being said, let us get started. Now, if something keeps happening over and over and over many years in the market, wouldn't it, knowing how to identify and use this occurrence, significantly benefit your trading success? So the big hedge funds know all about this, but everybody out there, as far as on the retail side, should understand it as well. So that's kind of what I'm going to try to present to everybody here today. So what this is going to do is going to really help to increase your trading success when you start to add this, one additional kind of component to your trading. So this is some stuff I've been using for 30 plus years. I mean, it's just some pretty incredible data and statistics that we're going to cover here and look at today. But that's kind of the first part. Now, when you look at seasonality, what it is, it's simply a market's tendency to move in the same direction each year in response to annual or reoccurring fundamental factors that affect the market to one degree or another in a timely manner. So by using these tendencies in our trading, it's designed to anticipate future price, movement rather than constantly just reacting to the endless, stream of often contradictory news and the noise that's in the market. Now, these seasonal tendencies, should be used as just a kind of a part of your overall trading process for selecting the highest probability trades. And many of these seasonal trends will repeat 87 to 100% of the time, year after year. So it's pretty incredible. So the combination of using the seasonality trend analysis with momentum, which is based on my trading model that I use, really makes it a powerful trading formula that can really sharpen your trades and give you, much better trading edge. So that's kind of a little, brief introduction, but to get back here and a little bit of background on myself, I started my trading journey actually on the oil side, and that right now we're in the biggest oil crisis we've ever seen in history. So it's pretty amazing and kind of interesting to be touching on this topic today. So, I started my career back in the 80s on the oil side. I was fortunate enough to get a job with this company called Coastal Corporation. And at that time, they had a training program that were, they take you in and train you to either trade crude or products, different things like that. And was very, very fortunate to get into that program. And they sent me down. First kind of part of the journey was to one of their refineries down in Corpus, Texas, and spent about 3 months there just kind of learning the foundation of oil. They bring the tankers in, offload those, put them through the distillation units, and produce, gasoline, diesel, jet fuel, fuel oil, all that kind of stuff. It's just really fascinating. So it's really kind of helped give you that foundation to start your journey. Now, I ended up in the shipping department, doing tanker chartering and all that scheduling. So pretty interesting. And in the VLCCs, everybody's talking about that today. So, that was a big part of my life back then. Spent about 5 years there at Coastal, sent me out to Singapore for a couple of years, which was fantastic, and traded all the Asian crudes and the products out there. And then ended up with a company called Transworld Oil. And they, at the time, were the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. So that was just a really unbelievable experience. And went through a couple of the big oil crises, with the Trans World. We were during the Gulf War, the first and second Gulf War, in the 90s, it was really big in that. We made so much money. It was just incredible. So the oil trading companies today are just making millions, and it's just unbelievable what they're going to be making with this big spike. But it was an incredible time. I was with Trans World for about 17 years, and with them in Bermuda for 16. That's their corporate headquarters were in Bermuda, and ran the international trading desk out of Bermuda for 10 years. So we pretty much did everything. We were in all the energy markets, cracks. You're talking about spreads and front to back spreads, all the different things we were doing. But one thing I'd like to point out is that every year I'd have to do my management plan, as far as, kind of forecasting what we're looking to make revenue wise and how we're going to do it. And the, management plan that I would put together was always based on seasonality. So these are, really strong tendencies that happen in the market. And, if you know how to spot them and you know how to identify them and take advantage, they can really give you an additional big time trading edge. And we'd always call it kind of catching the wave, So there were a couple different spreads every year. And if you could catch that timing of these spreads, it would literally, make your year. So this was, back in 1987, 88, I remember we did have a huge wave we caught, and it was on the Brent crude oil market. We did a couple different things there, but a lot of great, interesting stuff, in the oil side. And, we'll kind of dive on that and kind of highlight a few things here today to show you how things are looking on the oil side based on what's currently happening. So I just kind of wanted to, start off there. And now the following workshop today is purely for educational purposes. Any stocks, options, or futures mentioned does not constitute advice and should not be construed as a recommendation. So, when you look at seasonality tendencies in trading, it's designed to anticipate future price movement rather than constantly reacting to, all the different contradictory news or noise. So, there are, numerous factors that affect the markets, and certain conditions and events occur at annual intervals and will affect the markets to one degree or another, in a kind of, very timely manner. So, one of the most obvious is the annual cycles of weather. If we look at our weather, what happens? We go, winter, we go cold, and then back to warm. So these are, weather cycles. Well, within the markets, there are also different cycles that you can follow. So, commodity prices typically will, reach peaks or lows during certain times of the year. And this is going to be due to, production cycles, buying cycles of commercial users around the world, supply demand factors like that. So there are going to be times during the year then when supplies are going to be at their highest and demand at the lowest. So you're going to have to see these various trends and cycles based on that. So these are the general trends, but there are, a lot more, variables that determine the market prices as well. But seasonality is one big factor that you can take advantage of. So whether you trade, stocks or commodity futures or commodity spreads, the odds are that the seasonal tendencies are going to be one of the best ways and most consistent tools that you can use, in your quest for, trading profits. Now, these seasonal tendencies are used as a kind of a part of your overall trading process. You should use it as that part. And I'll go through and show you how to start looking at this and incorporating it. So this is going to really help you to increase your probability trades of success and kind of give yourself that better trading edge to give yourself, better profits. Now, many of these seasonal trends, and I'll show you here today, will repeat 87 to 100% of the time year after year, which is pretty amazing. Now, what I'm going to talk about though and walk you through here today is the directional trading process that I use that combines this seasonality with trend shifts and price momentum to identify these kind of high probability moves without exposing yourself to, major, downside risk. Now, these seasonal trends then are also things that can literally make your trading year. And, I mentioned that a little bit earlier that sometimes you can catch these waves and they would be kind of a wave and a trend that you could capture and stay on for a considerable period of time, making, pretty much your trading year. So some pretty amazing stuff. Now let's talk about how you catch these seasonal waves. Now, first, we're going to go through forecasting your price direction, and that's going to be the way that I do it is using momentum. So this is going to give us a good forecast of where price is going based on the momentum of price. And then the next thing is you're timing your cycles. So if you break down your winning trades or even your losing trades and you try to pick apart what makes them win or what lose, you're going to find out a lot of your trades are going to be, winners because you got the direction right. But the other big part of your trades is what I call the timing edge. It's when your entries or your exits. If you enter sometimes if you get in too early, you can lose, or if you get in too late, you can lose. So timing is a really critical part of it, and that's where the seasonality can really come in and help. And then the third part is spotting the breakout or these trend waves before they break out. So that's a really big part of it. If you've been surfing, you're always constantly looking on the horizon, looking for that perfect wave, and that's what you want to try to catch. Now, by using seasonality in our trading, it helps you to kind of look to spot and then catch that perfect wave. And then once you've caught that wave, you just want to kind of stay with it and ride it till that trend ends. Now, these seasonal trades a lot of times can happen only maybe once, maybe twice per year on a single major asset class. But when you're looking across multiple markets, the trading opportunities are really great. So these seasonal statistics that I'll touch on today, you can see them across, equity markets, bonds, energy, gold, silver, copper, platinum, real estate, agriculture. So there are going to be tendencies in all these different sectors of the markets that you can see the seasonality tendencies of those particular sectors at certain times of the year when they tend to, have these cycles either up or down. And they can be very helpful for, your trades that you're looking at down the road. Now, the step one then is predicting price direction. And, I always kind of comment, you can't trade blind. You need certain tools that are going to help you, in your trading. And one big one is to kind of predict and kind of look at where price is heading. And that's what I do based on using seasonality and momentum. So, when we look at markets and all the different markets you might want to trade, all these different markets and timeframes will trade in cycles. So, when you're trading any type of market environment, it's going to be all coming down to all about your price direction, the seasonal momentum. Do you have that seasonal momentum behind you or against you? That's a really big, important part of your trading. If you can catch that seasonal momentum, it's going to really help. And then timing your entries and your exits, and then managing your risk. So the best trading tools for signaling then price direction and market timing combined with seasonality trends is to use momentum flows. So, the indicators that I use and put together, they're based on these, kind of momentum flows. And these momentum indicators, what they do is they'll measure price strength or weakness. And when measured across multiple time frames, really sets up really a dynamic trend cycle indicator that you can use. So what this is going to do, what the way that I like to incorporate it is to, first off, is spot the seasonal trend. So there are a couple of different ways, and I'll show you how that works. And so we're going to talk about using the seasonal trend as kind of the anchor trend. So we're trying to get with the seasonal trend either up or down on whatever it is you might want to trade. And then to help to enter and catch that seasonal trend, this is where the momentum indicators really come in. So it can give you that kind of forecast based on momentum of when a certain price is starting to turn up or down, and get aligned with the seasonal trend if it's an uptrend or downtrend. So this is going to really help you to identify that new seasonal price entry into that trend early. It's also going to help to validate the strength of that seasonal trend at that point in time based on the momentum across different time frames. So it's going to help to define that either strength or weakness, and then that's going to help you to stay with the trade longer. If all the momentum looks good, you're going to be more confident in the trade, and you're going to stick with it, and that's going to really help you to ride that trend wave. So a lot of benefits for momentum, and that's kind of one of the basic parts of how I look to trade directionally. And we'll go through a lot of different examples here today. All right, so that's kind of a combination of things we want to look at. Now, then to navigate these seasonal trends, you're going to need, the trading tools that are going to help you to identify these market cycle turning points and the trend shifts. So I use, again, momentum that highlights kind of like what I call the intrinsic rhythm of the market. When you break down markets, whatever it could be gold, it could be silver, it could be the S&P 500, it could be, pork bellies, whatever. You're going to see that if you don't even look at what it is, you're going to just see these waves, these cycles, right? Goes up and down. You're never going to see something go straight up. I mean, we saw a little bit of it, the last week or so with crude, but typically we're going to have these seasonal swings or cycles that we want to be in alignment with. And that's what we're kind of being, I'm kind of obsessed with that. And so the system that I use is, kind of looking for these repeatable kind of patterns, and they're clearly going to be then defined and help to be defined by using my momentum cycle trading model, and then using multiple time frames or fractal analysis. You want to have alignment with multiple time frames, not just one, and then incorporating your moving averages to help you track the trend of your price, either up or down, or break of trend when it breaks those moving averages. And then also a big part is using Fibonacci to help identify key support resistance areas to trade up to or against. And when you combine and put these together, it really creates a kind of really dynamic system that you can incorporate into your trading and then help you to catch those seasonal waves. Now, the next step is that timing edge. So by incorporating and again using multiple time frames, it's going to really help to give you more clarity to the overall seasonal trend that we're looking to catch. And then we're going to use that for your day trades or swing trades or spread trades, entries within the seasonal trend that we're looking to get into. So what we're going to be looking at is using that longer term time frame that allows you to see the big picture in order to get the better clarity of the seasonal trend or sentiment that may exist. All right, so when we're looking at these seasonal trends, what I'll typically look at, I'll be looking at the daily time frame or medium term, I call it, and then the weekly or long term. And want to try to have those time frames aligned with the seasonal trends that are statistically potentially coming up that we can identify based on some seasonal data analysis that I use. So if there's a seasonal trend coming up for maybe to go long, could be go long the NASDAQ, or it could be go long crude or gold, and it's a seasonal trend that comes up at a certain part of the year, then what I'm going to do is I'm going to look at my momentum indicators, which will help me determine cycles changing, and that's going to help me to get into the seasonal trend. So what we're going to be doing is kind of aligning all the different time frames together. So for example, I have a seasonal trend, I call that the anchor trend, and let's say it's going up. It could be, let's say it's maybe, crude oil or something on a seasonal basis for refining is starting to kick up. So seasonality of the crude typically gets a bid going into gasoline season. So at a certain part of the year, the end of May or something, it really gets a big push. But we don't want to get in too early or too late, right? So to help us get into that seasonal cycle, that's where we're going to use momentum, and we're going to use all the different time frames to try to get them to align together. Now, when they align together, that's when we try to get into that seasonal wave. And so when I say align, we're going to be looking at like the daily time frame, medium term, and then we're going to break that down below that. I like to look at the 4 hour, the 1 hour, 30-minute, et cetera. So when all those start turning and they're aligned with the seasonal pattern that we're looking to get into, that's when you jump in. All right, so we'll go through some examples, to make that a little bit more clear to you. But that's a big part, to get everything kind of aligned, the different timeframes together to catch the seasonal trend pattern that we're looking for. And there's so many that we can look to get into, which I'll show you here in a few minutes. All right, so that's kind of step 2. Now, the third thing is then how do you identify the trade breakouts before they break out. And that's where we're going to look at using seasonality statistics and then patterns to help us catch these waves. All right. And then I use my momentum indicators based on momentum flows. And then we're going to use, spreads and options to manage the risk of these trades that we would look to enter. All right. So it's a really nice stepped process to give yourself a really good high kind of winning probability process of trading. All right. Seasonality, one, and then momentum to help catch the seasonal wave or not catch it. Maybe it doesn't happen this one year, things like that. And then we're going to look at using different spreads and options to manage the trade, to manage our risk once you catch that seasonal trend. All right, so that's kind of step three and just kind of in general terms. Now, before we get too far into today's workshop, I'll be doing a really in-depth workshop starting next Saturday on, using seasonality. So it's going to be, seasonal edge in a chaotic market. So this is going to be how to use these seasonal statistics, using options, option spreads, and pairs. And we're going to go through and start this course next Saturday, the 28th. We'll start at 11 a.m. Eastern to 2, and then we'll follow up on Monday from 4 to 5, and we'll have a dedicated Q&A the next day on Tuesday. But today I'm going to give you a good overview of, what we're going to really get into more in depth next weekend. Because there's just so much to cover, when we look at seasonality and the things that we look at in the statistics. So it's pretty amazing stuff. But anyway, before we get going too far, I wanted to pop this and show this to you in case you do have to leave early. So if you want to take advantage of this, I've got some really good discounts and good packages here. We'll kind of briefly touch on it here, and then we'll continue on, and I'll talk more about it when we get to the Q&A at the end of this workshop today. So use this link here, and then once you click on that, you should be able to click on it or copy and paste it on your browser. Click on that, and then you're going to see it pop up, and then use this for a 15% discount. So SEA 15, you'll get a 15% off. So use that small cap, and then you'll see, the window pop up. Once you, click on that link, let me pull that up. I'll show you what you should be seeing here. Okay, so once you click on that link, you're going to see this pop up. And then we'll just kind of run through this real quick, and then we'll move on, and we'll cover this in more detail, at the end of the workshop here today. So click on that link there that I just gave you, and then put in SEA 15 if you see a package that you want. Now I've got two different packages and a couple different options within these packages because of what you're going to get. But the first one is going to be course package 1, and this will be option 1 is going to be kind of $167. So with this option, what you're going to get is basically you're going to get the full course, live and recorded, and you'll have that, that'll go into your members area. Once you get your login, you'll have this course, and it'll be yours for forever as long as I'm doing this. And so what you're going to get with this course package 1, option 1. $1,600 value, so 4+ hour course. This will be $197, but today it's $167 if you use that price code SEA 15 small cap. So with this course, the full course is live and recorded. You'll get a 30-day trial membership to my trading club. You'll get that as just kind of an extra. Hopefully you'll stay with us, and if you do, it's $97 a month, or we have other different packages. And then I'm also going to give you 2 months of my seasonality vault. What this is going to be, once you go through the course next weekend, you're going to get my seasonal statistics that I use, that you'll see how we use this, some of them today, and you'll be having access to this on a free basis for the next 2 months. And if you continue on as a member, you'll get this each and every month. So you'll get that. So as an additional extra for you. And then we'll do a follow-up Q&A, that will be live and recorded. And then I'm also going to give you my futures trading, commodities trading guide. It's a really good, guide on futures, how to use that in case you're not, too up to speed on that. So a nice little extra there. So you'll get all that. And the price here will be $197. But if you come down here, when you go to this buy link here, click on that, you're going to be able to get this today at a 15% discount. So just put that, click that, and then you'll see everything you're going to, get under this package option 1, and just put it under here where it says promo code, put SEA15, and that's going to give you that discount of 167. Now, if you want all my indicators, you can add that to it, 195. So that's course package 1, option 1. Now, if you want, my indicator tools, I've got a really nice indicator package I'm giving everybody here today if you want to add this. And so what this is going to be, it's going to be my cycle reversal momentum indicator, which is a design for trading spreads, and we use it for any kind of directional trading. So we'll go through this a little bit today, but you'll get that as a as part of your bonus. Now this package will be just for an extra $30. This is what you're going to get for this extra $30. This is worth it right there. You should jump all over this. All right. So with this package, option 2 of package 1, you're going to get the full 4-hour live and recorded course, plus just for that extra $30, you're going to get my cycle reversal momentum indicator, which is what I use for timing cycle trends up or down, cycle changes, which you'll see here in a little bit. I'm going to also throw in my opening range breakout indicator. These are the prices on the website. And then I'm going to also include my Fibonacci price target mapping course. That this is what I use for all my targets, for profit targets up or down, and for defense targets. It's what I call Fibonacci price target mapping. So it's a full 3-hour course just on that. You'll get that as a bonus. And then a course that I just did this earlier in this month was hedging tactics for stocks and portfolios. So this was a hedging course on how to hedge your stocks and portfolios based on different collars, things like that. You'll get that as an additional bonus. And then we'll also get the 2 months to the seasonality vault, 30-day trial membership, follow-up Q&A, and that trading commodities guide. All right, so that's package 1, option 2. You'll get all that, and that's just going to be an extra $30, $197. So hopefully you'll jump all over it, and you just come down here, click on buy, and then you'll see everything here that's included that I just kind of went over. Again, put that SEA15 in there, click apply, make sure it's small cap, and you'll get this 197. All right, so that's course package 1. Now, if you want package 2, what this is basically everything you saw either in option 1 or 2 above that I just showed you, but this will be including my elite open and close trading alert service. Okay, so this, if you want alerts sent to you by text or email when I have a trade that I send out, this is where you can jump into this. And so this service is something I started back here, and you can see here my kind of summary of results. Back in 2018, I started the first alerts that I started sending out. Now there are 5 different types of alerts that I send out now, but I started the first one back in 2018, and through yesterday we've had, these are unaudited, but a summary of the results. We've had 996 trades closed out, 708 winners, 77 break even, 211 losing trades. So run about a 79% win break even rate over this time frame. So pretty good results there, I'd say. And then for 2025, for the year, we've had just kind of a brief overview here. We've had 151 trades closed out in 2025. Of those, 101 winners, 19 break even, 31 losers. Win break even rate there of 79 as well. Again, unaudited. And then so far for this year, we've had run a pretty good high win rate. We've got about 83% win break even rate currently up into Friday's close. So we've had 30 trades closed out so far this year, 21 winners, 4. This should be 5. I thought I changed that. 4 break even and 5 losers on this. So we're at about 83, 84% win break even rate there. So that's what you're going to get, and you'll get the 4 months of my alerts. Okay, so there are 5 different types of alerts that I send out. Plus, you get the 4 months to the trading club, which gives you access to my trading room and a lot of other, nice benefits. But so this is called package 2, and then I've got the 2 different options. Either option 1, if you just want the course and the alerts and those couple extras I showed you. Now, if you want my indicators that I showed you and all the additional bonuses, you would do option 2. Okay, try to make that as clear as I can. And so with this, alert service, you get, I have 5 different types of trade alerts I send out. And I'll just kind of briefly go through what usually we'll look at sending. It'll be either a lot of times butterflies or condors, do a lot of calendars or calendar diagonals. It could be a monthly penning trade that we do using butterflies typically. It could be an earnings trade during earnings season, or kind of breakout trades, which are, breakout credit spreads or debit spreads. So kind of 5 different types of alerts that I send out. When I send them out, there's a trading guide, trade setup review that I do, video review. And then for the next 4 months, you'll get my access to my weekly Q&As, access to my trading room, virtual trading room during the week for the next 4 months, and everything on my website 50% off. Okay, so that's kind of what you're going to get if you do the alert package. And then I've got my trading room open to you for during the week, Wednesday through Friday. We start off, on Tuesday with a live and recorded Q&A, and then every day after the market close, I do a daily video newsletter to, kind of overview of what the market's doing, what I'm looking at the next day. Member videos or archived videos for you, Traders Educational Vault, and then that discount of 50% off. So with this, if you do course package 2 option 1, today it's going to be 507. Okay, that's also Tuesday if you want. That's with the 15% discount. And then if you want the alerts with all the indicators and the bonuses for an extra $30, 537. So just come down here, course package 2, option 1, right there. This is just the alerts, with everything you saw in that option 1, where you get the seasonality course and the trading room, all that stuff. That's just going to be the basics, and just put in again that SEA 15, and you'll get this today for 507. There's 2 pay. And then if you want the alerts with all the bonuses and the indicators here, just use option 2 and come down here. It'll list everything you're going to get, so you know what you're getting there. And again, just put an SEA 15 on that. And this will be just for an extra $30. You're ready to go. All right, so just kind of wanted to touch on that real quick. We'll come back to it at the end of the today's workshop. And if you have questions, I'll go over that. But that's something I wanted to get out right away. And here's that link again if you need it. So it's powercycletrading.com / you can see up here / special, and then use that SEA like season 15. Okay. And so this will start next Friday, or not next Friday, but Saturday, the 28th at 11 a.m. Eastern till 2 or however long we need. And then we'll finish up on Monday with a dedicated Q&A the next day on Tuesday. Okay, so that's coming up. Now, if you think maybe you took this course in the past, you can just go to your members area tab and you'll see everything that you bought. And if you do see down here seasonality trading on it, then you did take this. The last time I did this was about a year ago, so it's been a while. All right, so that's one area you can look at to make sure of what you have and what you've taken in the past from me. Okay, so what I thought we'd start with now is go through kind of a market review. Okay, and so we're going to look at the current seasonal kind of patterns of where the market is at this point in time. So when we look at these seasonality statistics, these are basically in the course that we're going to go into in detail next week. This is a lot of the detailed data that I'm using. You're seeing a lot of these. You'll be seeing this kind of the seasonality charts that we're going to be using. And so on this specific one, this is the June S&P seasonality continuation charts, and this goes back and shows 5 years back, 15 and 28. So you can see it's color coded. So if you look currently where we are, we're currently right here seasonally, all right, on the seasonal trend. And this is for the S&P 500, the June contract. And so, and we're currently right here, okay? So there is the seasonal pattern to the market is actually, you know, to the upside, and the market's been trying to hold. We've seen, you know, seen it for the last, you know, month, really hanging in there. And a lot of that is because the seasonal pattern, the seasonal strength of the market when you get into March. So you can see the seasonal pattern. I mean, it's tends to be a pretty strong seasonal trend. All right, so this, you know, tends to, we have this kind of peak, seasonal peak here around the 2nd of April, but then you pull back, and this goes all the way to June. All right, so this is a very strong seasonal trend. It even extends into July. All right, so that's kind of what we're looking at there, and that's the S&P. And then here's the NASDAQ 100. So kind of similar, a little bit different, but not too much. But here we are currently right here. So we've had that seasonal move up, and you get kind of a little bit of a stall once we get into the first of April. You can see it's not too much. You can see going back 15 years, it just kind of stalls out there a little bit and then continues back on up into this June, July timeframe. All right, so again, here's the NASDAQ, a very, very strong seasonal trend, and we're currently right about right here, right there. So this is like 29 years back, you know, right there. So you can really see these waves, and these are, you know, this is what we want to kind of, if you're looking for a trend, that's a good seasonal trend that you want to try to trade into that trend versus trading against it, right? We want these trends that are back, not, you know, kind of the wind at your back and not at your face, right? To give yourself that additional momentum of seasonality. And then if we look at crude, the June kind of continuation contract on a seasonal basis, you know, we're currently right here on the 21st. So we still have another, just on the seasonality, we have a good seasonal uptrend here into, you know, the 1st of April. And then you see kind of a pullback. And then, you know, if I showed you further out, it has another tendency to go back up into May, which is Memorial Weekend. All right, but that's currently what we're looking at right now seasonally. All right, so, and this is what we're going to be covering in the course, you know, covering all different kinds of commodities and sectors. All right, so that's kind of where we are at right this moment. Now, what I thought we'd do next is let's go through, and I'll give you kind of a top-down analysis of the market currently that we're currently in. And the way I do this is I like to look at what I call the macro all the way down, so top down. Now, you know, back when I was running the trading group, we didn't have all the good technicals and the charts and all that kind of stuff. We pretty much had to rely on just the fundamentals. And what we do is, you know, we talk to our different offices around the world, and we get a, you know, kind of a picture of what the oil markets were doing or whatever we're trading. And then we kind of piece that together. But now, you know, we've got these fantastic charts and the indicators and technicals, so we can do this currently without, you know, all that other additional information, which is nice, but, you know, a lot of us don't have it to go on. So what I do is I look and break everything down based on what I call the macro, which is the monthly time frame. Then I go down to the next level, the weekly, and then to the daily, medium-term time frame, the daily. All right, so this is like, you know, you're flying at 30,000 feet. You can kind of see where we are, where we've come from, and what it looks like. And so if I take off, let me just take off these levels here. Let me take off some of these levels so you can see it a little bit more clear. Hold on. So you can see we've had a fantastic move up, obviously. Here's the S&P 500 SPX, CBOE index. And we've had this, and here's what I'm talking about, momentum, okay? So these are the momentum indicators that I use for direction. So cycle 1 is a really fast momentum measurement that I use. And then 2 is a slower momentum, which confirms cycle 1, which is fast. So you can see, just look at the cycles on the momentum here. So here you can see, just look below here, this cycle 1, look at this, see it, how it cycles? And then just look at the price. So this is momentum's going up here, price going up, right? Price trending, and then and then it comes down right in here, trends back up. So these are the ways that we can look at momentum. Now this is a monthly, okay? So this is a really long-term, what I call the macro time frame. And we are just now starting to break that 8 exponential moving average. This purple magenta, that's the 8 period moving average exponential. The dashed yellow is a 21 period. All right, so I track trend with the 21 period and the 8. Now, when we have a very super strong trend, it's going to be trending and trading, for an uptrend above that 8. And the kind of the mean reversion is to the 20 period or 21 period right here. So you can see the last time we had that was the tariff scare right back here, right? April, that's where we had it just crash below that, but it immediately bounced back. The taco trade, because Trump can control everything now. The problem now is that, Trump is not totally a taco trade. Now he could come out, Monday or over the weekend and say, okay, things are, we've got everything's at, peace. We've done everything we can do, blah, blah, blah. But the other side of the equation, the other part of the equation is that Iran needs to sign off of it. And so far, Iran has not done that. So it's not quite as simple as what we were seeing back here, where Trump can control all the cards. So we're just now breaking that 8 exponential. The last time we broke that was here, and then an immediate bounce back. And prior to that, you have to go way back. All right, so we could easily, and still be in this uptrend, we could easily pull back to the 21. That would be back down to about 6,100, 6,200 right there. All right, so that's the monthly. Now, if we want to zero in a little bit more, we lower the altitude and we fly down here to the lower altitude. We're going to go to the weekly long term. And you can see here, this is what we call a volatility squeeze. See how compressed it was right there? And now it's starting to break, but it's sitting right here on a really critical key area. That solid green is the 50 simple moving average. So that's a 50 period moving average. So that'd be your 50 week moving average. So that's going to kind of coincide or align with the 200-day, which we're currently broken through. All right, so this is a key area for this market to really needs to hold. Okay, so we'll look at the daily next, but you can see it starting to roll over. Now look at momentum. See here, momentum has shifted negative. Okay, look, so see it going sideways here? This is a weekly, so it's been like so this is back since September. So 1, 2, 3, 4, 5, 6, 7, about 6 months. Look at that. So see, this is momentum. This is my fast momentum measurement indicator, lower study 1, and you can see momentum went negative right here. That was right there in November. Okay. Now, but what you're seeing below it is 2 is still positive. All right. So this is a kind of offsets this negative momentum with positive, so it's neutral. And look what happens. The market just kind of churns sideways, neutral, goes nowhere, right? And momentum, my momentum indicator is telling me that. Negative on the fast momentum, positive on the slow, it just goes sideways. Now, once they both align together, then look what happens. It starts breaking down. So that's what we're going to be, using this with seasonality next weekend to give ourselves some really good trading edges and some great trade setups. All right, so now we've got momentum on 2 is broken down. So this is the 3rd week down there. Look where we are. We're at this key support area right here, the 50 simple moving average. And then we drop to the next time frame, the daily, which I refer to as the medium term time frame. And then you can really see even more detail, right? So look at this volatility squeeze here. That's that momentum, cycle 1 negative, 2 positive, or 1 positive, 2 negative. So it's just been cycling sideways, and then it broke that yellow. That's the 150 period moving average. Now, this is a key moving average that a lot of hedge funds use, the 150 period moving average. All right, so it started breaking that. And now look, we've broken below the 200 and let me put that 50 simple moving average on the weekly and you'll see where we are. We're right here, okay? So that's right coming in at 64, let's call it 64.65. Let me put that line in. So this is what I call kind of price target mapping, and you'll get this course, along with the seasonality course if you do that package too. So this is a key target right there, 64. We'll call it 6,500. Okay. So it really needs to hold this area here. Otherwise, we're going to be pretty fast. We'll be down to 61.70. That's a 382 retracement. So here's your Fibonacci here from that April low, swing low, to your prior high right there. We're just right now at the 236 retracement. This has been a really strong uptrend. It breaks here, this 50 simple moving average on the weekly at around 6,500. Then you can see the next stop down is right about here, 382 retracement. And that's coming in at about 61.75. That's also what we call, or what I call, price action support. See that area there? That was resistance. That became support. Look at it. See, look how that lines up with that 382. Okay, so that's going to be the next area right here where we are. If that breaks, then this is where you're going to see us head right to there. And all the systems, all the algo systems, they all have a lot of this encoded into their systems. The moving averages, this price action support, and then we break it down. This 64.55, I think it was. Let's put that in. Put this on the right, and then you'll see it alignment. Let's check this out. We'll put it down to the daily, and you can really get a really nice, sharp, clear picture. Okay, so here's where we are. So right there, we broke that 200-day. It really has to get back above that to have this trend intact, which is not looking too good. So that's coming in, and you can see here, these are that's the prior, right here, the daily. It broke the prior week's close and low on Friday. And that was right there at about 66.25. All right, so now we're next down to that 236 retracement level. This breaks here. You can see it's going to push down pretty fast to this area here, this 382. And that's coming in about 61.75, right about there, 6,200. And then the next level down is 50% retracement. Down here, that's coming in about 59.25. So you can kind of see the damage done, right? And then if we look at the other two major indexes real quick, you can kind of get a really, very clear picture. So the next thing, let's take a look at QQQ, just kind of as a proxy for the NASDAQ here real quick. And look at this. Again, if we look at the weekly, look how this thing has churned. It was in, again, this volatility compression. See, I can just going sideways right here. See the dots? And now it's at that 50 simple right there on the weekly. Volatility squeeze on the daily. Look how tight that pattern was. Now it's broken to 200, not good. And you can see where we are. The next, we're at this support level here. You can see this that's price action support. See the tops right there. Comes back down, holds, pushes back up. This is a key area. 580 breaks, and then you can see there's no more moving average resistance below. Then you have to kind of, what you're going to need to look at next will be, price action support and the Fibonacci level. So let's put those in real quick. Let me pull up another chart. We can kind of zero in on the, one second here. So let's put some fib levels in here. See if I can get it better with this chart here. So we're going to go from this low, this is a November low. Yeah, hold on. Already got the levels in. Wow. Broke below all that. It's ugly. Here's the April low right down here. Let's put that in real quick. Now, the one that we've been looking at to short has been the Russell. That to me will still be the case. If the, stoking inflation, higher interest rates, that's going to really put pressure and hit the Russell more so than anything. So when we're doing any shorts, the shorts that I've sent out on alerts have been to short the Russell. So we had a short on that, going into Friday. And so that's the kind of which index I'd be shorting, just to let you know if you're interested in what you're looking at for shorts. And so here we are. Let me put this out to the weekly. Now you can see the bigger picture here. I'll get rid of these fib levels. All right, so we're just right at the 236 basically. Right, there we are. Look at that. Perfect. And right there. So this 580 is big. You break that, next area down right there. See that price support? That's coming at 560, et cetera, et cetera. And then if we want to put the Russell on there, let's put that real quick, and then you kind of have the full picture. And again, here we are. Here's the weekly. Look, we broke down. We're below that 618 retracement level. This is the November low. Here's your April low here. And this level here breaks. The next area down is going to be headed right to that November low, right there. And that actually right here, 233, 235. So looking pretty bad. And you can see here's momentum. So this is really, until I start seeing momentum shift here, on these time frames, this market now is in a downtrend, and it's not a buy until you've got the momentum shifting to confirm. And the way that I start looking at that is using the lower time frame. So I'll go down here and I'll typically monitor the 4 hour, the hourly, everything's down below that. But you can see until we start at least getting the 4 hour cycle 1 and 2 positive, this is definitely a market that we could get a bounce, but the bounce will probably push towards this 50 simple, and then the market will come back in and sell it short. So, if we get a big spike, piece or whatever it might be, first thing up will be, head straight back to to this 50 simple moving average up in here, and then the market will start probably selling into it. Let's see if we get a, retrace back down. All right, so that's kind of an overview of that. Yeah, the downside momentum is definitely, you can just really see it. It's very, very clear. So those momentum indicators really give you a clear picture. Now, here's what I'm talking about when seasonality. There's so much going on right now that, it's a scary market, right? But there's always something that's going to be out there that can work for you. And so this is just to give you an idea of the different areas that, that have a seasonality of 100%, right? So this is just to give you a good example. So this is back, this is December, this is back in December, okay? So these are the seasonality trades that came up from the data that I use, okay? So just to show you though, to picture what you can look for, if you want. So for example, these were all the trades that were listed in the seasonality data for the month of December. So in the month of December, this past year, these are the trades that were listed for seasonal trades coming up. So you can see we had, things like soybean, corn, live cattle, copper, platinum, distillate, cattle, feeder cattle, RBOB gasoline, crude oil, the Dow. Okay, these are futures. But the great way to use this, if you don't have to do the futures, you can do the ETF. You can do the diamond, DIA. You can do the futures or the diamond or the index. Here's Australian dollar. If you do currencies, silver, S&P 500. Okay, the Russell 2000, gold. I mean, there's just so many, and these are published and come out every month. Now look here. Then you look over here. Look at the data. Look at the winning percentage. So the minimum, the floor is 80%. They don't have anything that's below 80%. Win rate over the last 15 years. This goes back, data is a 15-year data. All right, so you can see that here's one that was 100% of the time over the last 15 years. This is if you buy live cattle. So it's been a winner for the last 15 years. So 15 years, winner every year. Here's another one that's been a winner for the last 15 years, platinum. Here's another one, feeder cattle. So these are areas that you can jump into. You don't have to just trade, the usual S&P 500 or, whatever it is. You've got other alternatives if you want to go to that have a high potential win rate based on, 15 years of data. All right, so just to show you. So if you wanted to do this, hey, that looks pretty good. Let's take a shot. All right, so you can see here, and then it gives you the data here just kind of as a summary. You can see here's the typical entry date. So on this live cattle, you would have gotten into this trade seasonally around the 6th of December, and then it gets out around the end of December right there. This is going back for 15 years. This has got kind of the entry exit period for 15 years of what it's done. And then you can see here, total years, you can see average profit per day. And then we can go into even more detail and break it down even further, which I'll show you next. So the next thing, then I want to look at live cattle, see what it really did, see all the detailed statistics on that. I can link into it and go drill down deeper. So here's the contract. So this was going to be buying the April live cattle contract. The seasonal entry is on the 6th of December. The seasonal exit that they use to market is the 29th. All right, and then here's the backup detail on this live contract, April live cattle, going back to 2011. All right, so then you can see here, the 2025, the entry was the December 6th, 2024, got in, and the price it was trading at was 188.30. Exit price right here, the 27th, 193.35. So you can see here, the dates are almost exactly the same each time, right? That's how it's marked. And then you mark the exit right there, almost exactly the same. And then here's your exit price, here's your profit on the contract, and then your total profit amount right here in that column. It'll also give you best equity when that date was. All right, so you can see on the 27th of December 2024, the best equity was up $2,200 if you did, one option, one contract on this, and it'll give you worse equity right here. So it gives you a lot of great detail. And so that's kind of the stuff that you can fall back on. In the course, then I'll show you then how you can trade these if you're interested in doing it. So here you can see the average net profit per trade was $3.59, and the profit amount total was, $1,435. Okay, 15 out of 15 years. So a lot of detail there that you can, go back and analyze and see if you're interested. And then here's just kind of a nice little chart layout that shows you the seasonal pattern. So this kind of highlighted area here is where the seasonal tendency starts. So that's right there, that 6th or 7th of December, and then up here until kind of the end of December. That's kind of the seasonal trend that this has been marked, on these statistics. And then what I do is then I use this data as the trend that we're trying to get into, but I need to have my momentum, my indicators aligned with this trend. Okay, so in other words, if the trend on the seasonal trend is up, right? The seasonal trend we know from the data is a seasonal trend that is up. And that trend, the seasonal trend is marked on the 6th of December and marked out on about the 29th. But if my indicators are not giving me positive momentum for this trade, then I'm not going to get in. Or maybe I get in a little bit earlier or a little bit later, but I need to have my momentum indicators aligned with the trend. So that would be the momentum has to be up in order for me to jump into this trend. All right, and that's what we're going to be covering in the course. Okay, so that is, okay, so now here's the next part. So here's the indicators for live cattle. Okay, I'll pull those up. And here's where the system would have gotten in. See that orange arrow? That's what is a momentum upside cross that I use. And so you can see momentum went positive here, cycle 1, and then we had confirmation with 2 right here, right there. So it would have been in right there. The seasonal trend got in right the next day. So almost exactly the same. All right, so there was alignment with the seasonal trend. All right, now sometimes though, right now, there are a lot of the seasonal trades are underwater because the market's crashed, right? So seasonally, there's real strong seasonality for the S&P, for the NASDAQ, et cetera, in this time frame, this period of time. But with indicators, with the market, my momentum indicators down, I would not have taken any of those trades. But this trade you would have taken, right? And so you would, let's say you got in right here at $220 right there. And then here's where the seasonality got out. And that's, right about where the system would be getting out. Here's cycle 1 goes negative and then 2 is going negative here. So that was about perfect. And that was at 230. So this went from $220 to 230. So this was a $10 10-point move. All right. So this went up 10 points. And, then you look at, okay, if you're doing live cattle, every point is $400 for every point up. It's $400. So times 400 per contract. So if you did just one live cattle, just, you bought it here, just one live futures contract, and you sold it here, you made 10 points times 400. You just made $4,000. Okay. So that's the beauty of it. Seasonality was up. Momentum confirmed that. Take the trade. Nice, pretty easy trade. And then a number of different ways that we could trade it. We could trade it with just the outright futures contract, or we could trade it with futures with the options on that contract. So it gives you a lot of great alternatives for the trade. All right, so that's live cattle. And other than that, there's also, look at this. You had the platinum. Platinum had a huge move. Look at this. So platinum got in on the 6th, out the 26th of April. Let me show you this. Huge. This thing was like, I still have to look at the numbers. This thing was like a, platinum was like a, that was like a move of, wow, that 1,100, wow, still doesn't even seem right. Platinum had a move of like $50,000. Okay, look at this. Now this is the indicators confirming the trend. If the indicators have been negative, see, if you're looking to get into, say, live cattle, if my momentum indicators on that time frame have been negative, I would not have gotten in. Maybe the next day or two they went positive, but that's going to filter out the bad trades. All right. So here's platinum, for example. So here's platinum, and here was the seasonal entry right here on the 6th of December, and then it got out the 26th of January. So it got out right here. That's the 26th of January right there. I marked that line. Here's the entry. Okay, the seasonal entry was right here. And the indicators align with that. See, momentum's positive. The seasonal entry marked right there, December the 6th. Okay, so we'd be looking at this coming up. In the course, I'll show you how to set your watch list up. And then you can focus in, home in on, whatever it is you like. Then look at this thing. Look at this trend. Just trending up. That's the 8 exponential moving average on the daily. Got up here to that 8, pulled back to the 21. Held that 21. Here's where the seasonality trend got out. Momentum was still positive on cycle 2. So, following that, you would have still stayed in as long as it held the 21. So that 21 is would be the mean reversion, and a break and a close, below that that would be your your stop. But it held. All right. So then it got out here. This move from here to here, I still have to look at the numbers over and over. That's like that's over $50,000 if you did one contract to here. That's 1,100 points. That's a huge, huge move. All right, so these are, some of the stuff that you don't have to just, trade the usual. Here's RBOB gasoline. Now this was, look, oh, wow, only 87% of the time, 13 out of 15 years. Oh, wait, here's the E-mini Dow. See, here's 18th of December in, the 15th out, 14 out of 50. Now, here's the deal. So here was the Dow. Let's take a look. And I think the indicators were not aligning with that. That was, let me just mark the trade here. That was the 18th of December. I'm just going to write that down. And it got out. Here's crude oil. Here's the S&P. Here's the Russell. I'll just do this one. Here's the S&P. Got in the 19th and out the 15th. Okay, so let's just take a look. So the seasonality got in the 19th, out the 15th, 13 out of 15 years. Seasonally, that was a winning trade. Let's see what this year would have done. So we could use, let's just look at the SPY if you want to do the ETF. So this would have been in the 19th was when the seasonality marked it to get in. December the 19th. Okay, so here's the deal. So here is I'll mark this, and this is the way that you can align it to filter out the bad seasonal trades. Okay, so seasonality, it got in right here. 19th, right there. Seasonally went along there. Now, look, my momentum indicators are negative. Cycle 1 and 2 are negative. So there's, I would avoid, I would not get into that trade. Now, then you can just then pick your spot if you want to still, get into it, then take a look. So get rid of this drawing tool. And this is the daily. I'm also using the lower time frames as well, like the 4-hour. Okay, so then we had momentum negative, cycle 1 and 2, and then we finally get positive momentum right here. That was on the 23rd. Okay, so let's say you did want to jump in, you could have jumped in there, and then it starts tracking, goes sideways, it's holding that 50. So that 50 is going to be a key. The 21 to 50 are two things that I'll be looking at if I was in that trade as your stop. Okay, you can see it's just churning sideways, but it's holding that moving average. All right, so you could just stay with the trade if you're in, but you want to have a good tight stop if it starts breaking these moving averages. Now this thing went all the way just on a seasonal basis to the 15th of February. So here it starts to go, still holding that 50. Look at that, just going sideways. See, that's a volatility squeeze. The dots that is programmed in to show when a squeeze is in effect based on the parameters of what a squeeze is for the system. And then look, here it starts breaking. See, it starts breaking this 50 right there. So, and look at this momentum. This is a momentum indicator. So, you know, I would have been out if we were following the system, the momentum system, the seasonal trade would still be long, but we would be out of the trade right here. So we would have been out of this trade at about a little bit of a profit to break even. So would have gotten in right here. We can look at it real quick. Right there, would have gotten in the 23rd of December if you wanted to follow that. And then you would have been out right here at about a break even. All right, so the system would have gotten in here, and then it would have gotten out right here when momentum started to go negative. All right, so that was basically, let's say we did the closing price here. That close was 687. And on this date here, the 2nd of March, actually, yeah, this got out the 15th. The seasonality got out right here. Oh yeah, so here it started breaking the 50 right there. We would have been out on here the 12th. See that break of the 50, close below it, you just get out. So basically a break-even trade on that. But you know, that trade seasonally though had been a winning trade 14 out of 15 years up until this year. Okay, so that's the alignment that we use. So you've got, if you did this S&P trade, actually 13 out of 15 years. So this would have been a losing year, you know, add to that those stats. So there's kind of the alignment that I'm talking about, and that's what we're going to be really diving into and covering. Now, the next thing is seasonal trades using spreads, you know, and also with the seasonal trends, but then using again momentum flows to align to get into the trade. All right, so spreads are a really great way to control your risk, keep it neutralized, and more less systemic risk to you by having a spread or pairs. So when we're looking at spread trading, it's basically a market neutral kind of strategy that seeks to neutralize market risk factors by taking offsetting long short positions, pairs, right? And instruments with some kind of theoretical relationship. So as long as the stock or security you buy outperforms the stock that you sell against it, you're going to make money. And the bigger the outperformance, then the more money you get regardless of overall market direction. So that's why spreads or pairs are so great. So this makes, you know, spread trading or pairs trading a fantastic way to make money without having to take that broad overnight market kind of risk. So for example, if you were doing a spread, let's say you had stock A and you had stock B, and they're correlated enough where they kind of track with each other. They're in maybe the same industry or they have some kind of relationship together. Now, if this correlation then starts to, on a temporary kind of basis, weaken, then maybe stock A starts to move up with more momentum or strength versus stock B that it's correlated to. that gives you a potential for a really nice pairs trade to exploit the divergence, between the two starting to spread out. So then you're going to be going long the stronger one, which would be in this example stock A, the stronger security, and then short against it B, the underperforming issue. And then you can see the spread out widen. So here's your stock A. See, they're both right here in this example at 0. They're both trading, let's say, at $100. Okay, but then stock A starts to go up. So maybe now stock A goes up here to $150. But then look, stock B is actually going down. Maybe now it's down to 25. So you can see that spread. See the spread widening? So here, then, if you were long stock A, short stock B, you're not playing the specific stock, you're playing the relative strength between the two, the spread. And look at that blowing out. So that's how you can really make great money, but also kind of neutralizing your risk and knocking out that systemic potential risk that you would have with the broad market. So, for example, if you had a really strong spread and the market's crashing like it is now, can still easily make money even in a hard downtrending market. You're just looking at the relative strength between two things that are correlated. All right, and that's the great thing with spreads. Now, the other cool thing is if you look at a spread, you can actually make money 5 different ways. So if you're going to go long short, you're only make money if that stock goes up, or you're only going to make money if you short it, it goes down. But if you do a spread, you're going to be able, let's say you go long, we'll do an example here in a minute, heating oil. You go long heating oil, and let's say you go short crude, okay? So this is what we call a crack spread. And so as long as let's say heating oil rises faster than the short, which would be crude, you're going to make money. All right, that spread widens. So let's say you go long here at heating oil and you go short crude, and crude goes sideways, but heating oil goes up, but crude goes sideways. You make money. See that spread widening? Or let's say you go long heating oil and it goes sideways, but crude starts declining. That spread's widening, right? Or let's say you go long heating oil and it starts going down, but crude starts going down a lot harder than the heating oil. Or let's say you go long heating oil, it goes up, crude goes down. You get the spread widening, you make the money, right? That is the beauty of the spread or pairs trade. So, these are spreads that are also seasonally listed, and that you can look to trade, with these statistics. So here's just an example, of some stuff that came up in a December series. So here's one that was during a December time frame, had all these different spreads that were available with the seasonal statistics. And you can see here was like something like soybean meal, long, short soybean oil, just all kinds of different combinations. So it gives you a lot of things to choose from. And, there may be one that you like, or you may not have interest in any, but here's one that I always like is gasoline crack spread. So here's one that you would go long gasoline, RBOB, and short crude against it. That's what we call a crack spread, a 1-to-1 crack spread. So this seasonally entry was on the 9th of December, and then out the 23rd of December. So marked in, marked out, winning percentage 100% of the time over the 15-year period, 15 out of 15 years. Average profit over $1,784. All right, so that's where then you get the trade idea. 100% of the time, wow, that's pretty good odds. I think I'll take a look at that. And then you set the trade up, you monitor it. I'll show you in the course how to do that. And I'll show you how to set the trade up if you're interested in something like this. And then you do what we call this crack spread. So here's the trade setup, what it would look like. So this would be long February gasoline, RBOB, short February crude against it as that spread. And this was getting in the 9th, out the 23rd, but we're going to want alignment with the momentum indicators, because it might not be this year. It might not be a winning trade on a seasonal basis. That seasonal trade may be a loser. All right, so I drilled down in here just to show you this example. And here's going back 15 years, the spread and you can see, what it's done. Here it made 1,700. Here it made over 5,000, $600, 1,400, et cetera. You see all the data right here: best equity, worst equity, et cetera, et cetera. And then you got that detail, and then you want alignment. If your indicators, here's the seasonality chart between the two, the spread RBOB long dash short. Look at RBOB long crude short. Look at that spread straight up. Even if the markets have been tanking, that spread was making money. And then here, I just wanted to show you currently, the market's been really focusing here currently on the jet fuel and diesel cracks, right? So here's the crack spread on heating oil diesel. So just to show you, and these are things, if you're interested in the course, I can show you and teach you how to do this kind of trade if you're interested in doing these. So here's the current crack spread. This is going to be long heating oil and short crude, okay? And so this is converting heating oil, they're to barrels. There are 42 barrels per for every crude. There's 42 barrels, 42 gallons, I should say, of heat to 1 barrel of crude. So we're just going to convert this heating oil to a barrel, okay? And all we do there is just a multiplier of 42 times the price of heating oil, and that gives us our spread. So you can see here where that spread was back here, just starting out here. This is the daily. This is a continuation. This is actually the May contract. Wow, man, what a move. So here it was back right here. Let's just mark this right here. This was on the 12th of January. I'll just put this in. You can just kind of visualize and see how powerful these things are. And here it was. Put this to 4 hour. You can really see it. Okay, look at this. Here it was on the 11th of January. Now here again, momentum, right? These momentum indicators are fantastic for spreads. So for example, let's say we had a seasonality trade on heating oil, went long heat, short crude. Trying to find that time frame. Here we are. All right, so see here, momentum was negative. So with this spread, would have gotten in right about here. This would have been a good entry point right there. I'll put this line over there. Now the system would have then gotten in right here. All right, so right there, that was on about the 12th of January. Let's put the price at $30 a barrel. We converted this to per barrel. Now remember, one futures contract is equivalent to 1,000 barrels. So if you bought one futures contract of heating oil or one futures contract of crude, you're basically physically controlling 1,000 barrels. So let's say you did this crack spread right there where it was trading right there. So you bought heating oil and you sold crude against it. You just did one contract and you got into it at $30. At that spread was $30 over. At that point, heating oil was $30 a barrel over crude. Okay, so we're going to put that in. I'll just put this in so you can kind of see it. And we'll put this over on the right. Okay, got in right there. Let's say that was the entry. And let's see, there was a seasonal entry there. There may have been, I haven't checked. And then it just started going up, right? Now look at this thing. It just kept going up. Look at where it is now. Now this one you could have traded here. We've been using the indicators. We're looking at this moving average. It started chopping around here. You would have been out. Could have gotten back in, but look just to show you the potential that this has. Let's say you got in there and you stayed, that's a 4 hour, but let's say you did this and you're really tracking it with the long-term weekly. So you would have, we're looking at the weekly time frame, we would have gotten in right about here. Still about the same, about $35. Let's say we got in right about there. Yeah, we'll just say $35. And now where is it? 82? $82. Okay, so how much money is that? That's a lot of money. So if you take 82 and you got in, let's say you got in at 35, and let's say you got out here at 82, what is that? How many points is that? It's $47. $47. And then remember, one futures contract is equivalent, is basically not equivalent. You basically are controlling 1,000 barrels. So that's your kind of conversion. So if you were to have bought this heat crack right here, bought one contract of heat, sold one contract of crude, you got out here, that's a move of $47 on that spread times 1,000. So you can just see that's $47,000 if you did one spread. Now, you know, hedge funds, refiners, they're doing thousands of these things. So, you know, huge money. But anyway, those are going to be trades that will be listed seasonally too, and then you can pick and choose. But that's just to illustrate what the potential is. And so here's, you know, just, you know, a good spread example. Here's like if you're going to, this is an example that we had on long QQQ back on the 6th of March, and then out on the 19th of May. And this is like to show you, you know, per 100 shares, just to show you how these spreads kind of work, the math behind it. So here's the spread. This would be making it dollar equivalent. So, you know, QQQ is a higher value contract than the Russell. So we're going to be long one QQQ, short in this example, two Russell to make it dollar equivalent. So this would have gotten in right here. See the momentum shifting, cycle reversal, momentum up, just a quick example. So let's say it got in right there. That was $76 under based on this spread relationship. So QQQ was $76 under the Russell 2000 as a spread right there at that point in time. All right, so then look, started trending up. Look at that beautiful trend up. Stay with the trend. And then you got out here. So 16 under, okay? So it went from 76 under to 16 under. So let's say you got out right there. So here's just kind of how the math works, just to kind of show you that. And then here it is, just this example. So you got in here on QQQ on the 6th, and at that point in time, QQQ was trading at $302. Now, if you were just doing this as a contract here, QQQ at 302, out on the 19th, it was up to 336, so that was up $34 basically a share, right? But you were doing this as a spread. So at the same time though, you went short the Russell on that same time frame, and it was trading at 189, right, below QQQ. But you did this two times to make it more dollar equivalent, right? So you had QQQ long one at 302, short two Russell, so 378. All right, so here's your spread there, okay? So that's what you're basically trading, is you're trading this spread. And so here's your entry. You've got that 378 minus 302. So what's that spread? 7,600. There you are. See that? 378 minus 302, 7,600. So this is the long entry right there. And then if you got out here on the 19th, you can see your QQQ is at 34.20. The Russell was trading at 176.25, right? But times two, right? So that was, the Russell was trading at 352. Now you got into the Russell short at 378 out at 352. So you made a profit there on that part of the spread at 25.50. So here's your total, just as a spread, 7,600 minus 1630, where it went to right there. You're up $59.70, per share on 100 shares to make a dollar equivalent to an option contract. You're up $5,970. So that's the other beauty. And then if the market, let's say you did this trade and the markets, were crushing to the downside, you're still making money, right? So here we can just do that example real quick. I'll show you what that would currently look like. I'll just give you a really, let's see here, 1 second. Let's see where the Russell went out. We could do a real quick spread. I'll show you that. Oh yeah, here's that link again, Barbara. Here's the link. Do the Power Cycle Trading /special, and then put in that discount code SEA15, and that will give you your what you need there, and then just pick the package that you want. So let me just give you that link one more time here, and then I'll show you what that QQQ Russell would look like right now on a spread. Just kind of a quick example, and then put in SEA15. So just going to check here real quick. Here's the other one I just want to show everybody. This is the another thing that the markets are following. If you're an oil trader, these are the things that we used to trade. This is the other thing that we'll cover in the course. If you want, I'll teach you how to play these front to back spreads. So this is like if you went long, we're going to make this May crude long, short December. This is what we call a spread, a timing spread. So here's the spread. If you're long May crude, short December crude, here's that spread. It went from $2.90 to 20. Man, that's a huge move. Unbelievable. So let's say you got into the spread, at this point in time, this was like the 26th of February, that spread was at $2.70. So May was traded at $2.76 over December crude. Now that spread is 2020. Huge. So it went from 2020 minus, here it was, let's just say 250 under. That's $17 move from here to here. Let's just say $18. That's an $18 move. Remember, one futures contract is 1,000 barrels times 1,000. If you did one contract, $18,000. Now, when we were trading these spreads, we would do thousands because the margin's really cheap. So there are just literally thousands and thousands and thousands of these trades that are going through. And these are, over the counter and the physical. Yeah, it is just a wild time right now. These guys are making huge money. Okay, so that's what that looks like. And then here's the other big play that the market's playing, Brent WTI spread. And this is if you have Brent long, WTI short. Now what this refers to, this is a front to back. This is a spread between Brent, which is the offshore North Sea grade, which is kind of the marker crude for global sweet crude, versus WTI. Now the differential between the two, you can see that Brent now is trading at 14 over. It was, I think, over right here. Look, it was at $29 over. So a lot of that's what we call transportation cost. WTI's landlocked, Brent's offshore. So if you were to take WTI and you ship it to, someplace, got to look at the shipping costs, and that's how you figure that out. There are a lot of different things you can do with spreads, but anyway, that's kind of a summary of things that you can do. And then, if you want, I can show you the crude Russell 2000, but we're kind of up against the clock here. Hold on one second here. Any questions here? All right. Here's a question. So based on my experience, do you think the Iran war continues for a few more weeks and SPX and QQQ stay down, or based on seasonality, do they move up? Yeah, no, I think seasonality is totally taken out of the equation now. It's just totally ripped apart everything, and there's so much damage done. Production being shut in because tanks are full. They don't have storage. You've got shipping. It takes like 40 days to get these VLCCs to Asia. You've got that. You've got the straits they're still dinking bombs and stuff at these ships. So all it takes is to hit one. I don't even want to say it. I don't want to put it out there, but if you hit one ship in the strait, man, it's just, I don't want to say it. No, yeah, it could definitely go on. Definitely go on. All right. So anyway, that's how spreads work. And anyway, I was going to show you the front to back on the Russell. I'll just show you a quick kind of one-to-one relationship to show you how it can work. And then any questions? If not, I'll show you what we're going to cover next weekend. Got a lot of good stuff we're going to go over in much greater detail. And 1 second here, I'll show you that Russell QQQ spread real quick. This is going to be just kind of a rough idea. I don't know the exact conversion quite yet. So hold on. All right, so here's just kind of a spread between the Russell and QQQ. So even with the markets crashing down, so if you're long QQQ and short the Russell on a dollar equivalent basis, if you did that, let's say you went long the spread right here on the 3rd of March, just playing the spread, not caring about the market. This is what it does for you. This is how it neutralizes your any overnight kind of systemic risk. This is the great thing with spreads. So this is just playing that relationship between the two. If you're like I showed you in that example here a minute ago, long the QQQ, short the Russell. And let's say you got out right there or something like that. So that went from here, let's say $85 up to 95. Okay, so let's say it went from got into the spread right here at 85 QQQ over, and then you got out here at 95. So you made $10, right? So $10 per spread times 100. If you did, we would do it with option contracts. So that's $10 a share. And if we, did this with, so this spread would have made $10 per share. Okay, even with the markets cratering, this spread made $10 a share, $10 per share. And if we were doing this with a pairs trade using options, then we would have made $1,000 on that spread if you did one spread and did that. And look, where the markets were coming down, this is why spreads can be a great way to trade any kind of market, but especially when we get into markets that are huge potential risk to the downside or whatever, systemic risk. So here's the market if you'd gone long QQQ, short the Russell, even with QQQ getting crushed, the spread, we had lined the spread up on the 3rd of March, right here. Right here. And then it crushed down right here. So in here, out there, look, here's your spread. Even with QQQ going from $5.99 now to $5.80, down $19. If you did the spread, you were still up $10. QQQ long, Russell short, because the Russell went down harder, okay? And that's the beauty of it. Now here are a couple on the horizon coming up, and these are some that we'll be covering next weekend. So you've got like the Dow. These actually might be good trades because we've had such a big washout. We've got the Dow futures coming up. So there's been a winning trade 13 out of 15 years. This will be coming up in April. You've got the natural gas coming up. This will be a 93% winning trade. Can show you that. We've got the Russell 2000 coming up. So those are just outrights that are going to be coming up in April. Here's some spreads that are going to be coming up in April. You've got well, here's the detail on the Dow trade. This has been a winning trade 13 out of 15 years. And here's some spreads that are coming up. You can see here's where it currently is, and here's where that spread starts to kind of start grinding up right there. And then here's just a few that are coming up on spreads we can cover. You've got spreads between the feeder cattle. You've got all kinds of stuff. Soybean. There's just so many different ones you can do. So you're not going to be limited to just the same old vanilla if you want to do these kind of trades. So I wanted to cover all this here today, and I hope this was bring together ways that you can capitalize on these seasonal trends by using spreads, options, and option pairs, and that's what we'll get into in the course next weekend. But kind of wanted to give you that kind of overview here today to see what you can expect. And if you would like to join us, then come on down and put in that code there, powercycletrading.com/special. Click on that, put in SEA15, and you're good to go. And then with this, you'll get everything here today for $167 if you do course package 1, option 1. So here's everything you'll get with that. You'll get everything at $167. With the extras, you'll get a 30-day trial membership to the trading club. That's $97 a month. You'll get the follow-up Q&A, which will be on Tuesday, live and recorded. You'll get the futures trading guide, and then you'll get the recording, any handouts. So still a really nice package. Everything here today, $167, 92% off there. And if you do want my indicators, which I'd highly recommend, to get the cycle momentum reversal indicator, that's what we'll be using in the course. $397. You'll get the opening range breakout indicator. You'll get the Fibonacci price target mapping. My hedging course that I just did this earlier in the month, you'll get that. 30-day trial membership, 2 months to the seasonality vault. You'll get that on both packages. And then you'll get the follow-up Q&A, all about futures, everything there. Today, just an extra $30, $197. So that would be option 2 under course package 1. And then if you do want the alert service, then that's going to be course package 2. And then if you just want it with the extras, that'll be option 1. If you want it with the indicators and all the bonuses, that'll be course package 2, option 2. Okay. And with this, you'll get whatever alerts I send out. It could be a butterfly, or it could be a condor, it could be a calendar diagonal, it could be a pinning trade, it could be breakout reversals, it could be, which would be a debit spreads or credit spreads. It could be an earnings trade, during earnings season. So with that, you've got 2 options as well, make it easy for you. So if you do want it with just the extras, not the indicator, but just with the extras, that'll be $507. There's a 2 pay for that. Then if you do want it with the, like package option 2 with the indicators and all the additional bonuses, just talking 30 extra bucks, $537. All right, with this, you get the 5 alerts, but, depending on when I send out what's up. I give you, I have a trading guide. When I send it out, you'll have a detailed trade. I use what I call Telegram, which is a free app that sends these things out within seconds. And so really great app for that. Trades are listed in archives, so you can go back and look at them later on. We'll do a live, recorded live Q&A every week, typically on Tuesday, live and recorded. And then trading rooms open on Wednesday through Friday, 9:30 Eastern till 10:30. Do a daily video newsletter every day after the close. You'll have that for the next 4 months. Now you can start and stop this too if you go on vacation, or you want to put it on pause for a while and then come back. You're not going to lose your time, so you can do that automatically. Then you get access to my trading room, and then 50% discounts on everything on my website. So again, just a quick review. I'll go back and I'll show you some of the recent trades we've done. We've had some pretty good trades here recently, which has been a hard market to trade in, but we've done pretty well. So, over since inception, we're up running about a 79% win break-even rate. Again, these are all unaudited, and that's through Friday. And then we've got for 2025, win break-even rate was, 79%. And that's what we, did in 2025, breaking it down. 151 winners, 101 winners, break-even, losers, unaudited. And then we had, so far for this year, we've got 31 trades closed out, 22 winners, 4 break-even, 5 losers, run 84% win rate, unaudited on those. All right, so that's everything there. And again, use that promo code powercycletrading.com/special, and then put in CSEA15, and that'll get you that discount. Now, here's kind of what we're going to cover in the course starting next Saturday. So we'll first, go through the seasonality statistics that I showed you today. I'll go through these in much greater detail. I'll show you the resources I use to collect and get all this data. And then we'll put together how you build your seasonal watch list, so you can review and monitor and get ready for a seasonal trend that you want to jump into. And then how that we can use stocks and ETFs or commodity futures, based on these seasonal statistics. So the big fun part is the going back and looking at all the seasonality history statistics that we're going to cover next weekend. And these are on these commodity futures, and these are, a minimum of 80%, over 15 years. Okay, so then you can go through and pick the ones you like. If let's say you don't want anything except 93%, 14 out of 15, then you just kind of look for whatever you're looking at. We'll set up a watch list. I'll show you how to do that, and then you monitor it using the momentum indicators. Get in when the momentum tells you to get in, get out when the momentum tells you to get out. But we're following that anchor trend, the seasonality. That'll be the key. How to catch that seasonal wave, then using the indicators, cycle directional indicators, momentum indicators that I showed you. Seasonal trading review, we'll go through a lot of different trade setups that are coming up, show you how to do those. Part 2, we'll go through the seasonal trend and the tools used. So we'll go through the momentum indicators, how to set those up and use those to confirm trend direction and strength, how that's done, using the cycle reversal momentum indicators. So this is going to give you that advanced cycle reversal alert to a seasonal trend starting to set up. And then when we have momentum clicking in, that'll be the trigger. I'll go through exactly how that works. We'll go through then how to use your Fibonacci for setting up your price targets, which is what we call Fibonacci price target mapping. This is also a bonus course for you if you do option 2. And then, we'll track these trends using the moving averages. I'll go through the seasonality, swing trade entry rules and exits, how those are set up, how to use those. So very, very step-by-step for you. And then part 3 is bringing it all together. We'll go through some of the different strategies that you can use using futures or synthetic option pairs and things like that. So there's a lot I'm going to cover here, and then we can also, make it more selective if you do want to, spend more time on crude oil timing spreads or crack spreads, we can do that. There's just a lot I can cover for you if you want. So we can make it very, very kind of more specific to different areas if people want to go that direction. And then you're going to get the seasonality statistics for the next 2 months. And if you stay on as a member, you'll get these each and every month. And I'll give you my ebook here, all about futures, is still, as part of the extras there. So, Jim, one of my members, he said, "Oh my God, never expected to learn this much in a course. You open up a whole new asset class to trading. Kudos on the quality, and you've shown me that I can drink from the fire hose." So that was pretty cool. And then Lee said, "This was an amazing course. This stuff I had no inkling about. It's like a graduate school course. Nobody else talks about this kind of trading." All right, so here's what you're going to get if you do join me for next weekend. You're going to get my, if you do option 2, you'll get my cycle momentum reversal indicator. So what this is going to do for us, we can trade our spreads with this indicator or just direction with any stock or whatever we're trading. So this will give you this comes with the reversal part of the indicator. This gives us an alert to change in potential cycle. And then the momentum indicator, cycle 1 and 2, is what gives us the forecasted direction. So this is going to be used to help enter a seasonal trade or exit a seasonal trade. So we're not totally reliant on the seasonality. We have to have confirmation based on our momentum to get into the trade and then get out. So it's it's an upper and lower steady indicator. So you get that. That's if you do option 2. You're talking $30 additional cost, so no big deal, right? So that's what you're going to get. And this is kind of what that'll look like for you. You'll get the momentum indicators, a reversal indicator, and that's what we can use for spreads or just whatever you're trading. And then I'm going to also give my opening range high-low breakout indicator. This is an indicator that we set up actually at Transworld back in the 90s to trade intraday crude on the open. So it gives you an opening range, and then you can go long, go short based on a break of this opening range. So you're going to get this if you do option 2, only additional $30. I've got these indicators: Thinkorswim, TradeStation, TradingView. Okay, and then here are the additional enrollment bonuses. You're going to get my option 2. You'll get my price target mapping course, and this is what we'll be using to map out our targets, upside targets or downside targets for our profit take areas. This is how I do that. And so this is an on-demand course that I did, which incorporates for this use Fibonacci analysis with your trend lines, price action, support, resistance, standard deviation, forecast, and any option activity, unusual activity. So it combines all this together to give us really good areas of support, resistance that we want to look to trade against, or 2 for profit take, or even triggers for defense, stop outs, and things like that. So it's a 3-hour plus course on that. So you'll have that with the videos and handouts and the PowerPoint. Now this is a course I just completed that I'm also going to give everybody here that does option 2, just for that extra $30. You'll get this course. This is currently, I think, $297 on the website. So just finish this in March, but this will give you a course on how to do what we call the protective collar to protect a stock or stock portfolio. So it's a course I did just 2 weeks back, and really great on teaching you how to construct a portfolio hedge on your stocks or a stock portfolio. Go through a lot of different examples here, doing a portfolio up to $2 million or more. And then we did a couple of different stock hedges for NVIDIA and Walmart. So you'll get that as just an additional bonus. And then the other bonus, everybody will get 2 months to my access to seasonality vault. This will give you all the seasonality trades that are coming up, so you can mark those ahead of time. So this is based on 15 years of seasonal data history there. And so you'll get that. As just everybody will get that either package, and this gives you this list every month. This will be for the 2 months out, so you'll have this for 2 months going forward, rolling forward, and so it'll show you everything that's coming up, either an outright buy sell trade or a spread trade. So you can kind of start building your list here. So you have that as bonus. Both packages will get that, and also for spreads, things like that. I give you all this good detail there, the data and the chart information there. And then you're going to get the my next bonus special 6. You'll get a 30-day trial membership to my trading club. So if you do package 1, either option 1 or 2, everybody gets 30-day trial membership to my trading club. So this gives you access to my trading room during the week, 9:30 to 10:30 Eastern every week, Wednesday through Friday. And then we start the week off with a live and recorded Q&A on Tuesday. So you have access to that every week. Traders Educational Vault. I do a video newsletter after the close, kind of give you a daily market update on what we're looking at, what trades we're looking at, what trades we put on, what I'm looking at for the next day. And then a 50% discounts on everything on my website. You'll get a discount code, and then any course, any indicators on my site, you can get for 50% off. So everybody get that. Here, I always like to point this out from Jay. He said, reading books is fine, but seeing the actual option trade set up makes a huge difference. So that's what you get out of that. And then we'll do a follow-up Q&A every, we'll do this. We'll have a dedicated one this next Tuesday on this course, not this Tuesday, but the next one after. And you'll have that. And then you're going to get a 30-day trial membership to the trade room. So you can come in and, ask questions. Or if you do course package 2, you'll have this for the next 4 months. All right. And then bonus 8, futures trading commodity guide. So this is a nice handout tutorial on commodity futures, how they work, backwardation, things like that. And then you'll get a tutorial on my trading model, so you understand how that works. Now let's go through. I'll show you a couple of things we've done here recently on the alert service to give you an idea what you'd get there. Question: what are the renewal prices after 4 months with the course? Basically, it comes out to the renewals about $100 a month. Okay, so you're pretty much locked into that. So if you do a renewal, it's basically going to be $100 a month, and that's for the alert service with the trading club. So if you wanted to renew, you'll get it. You could do it for another month or 4 months, for $100 per month. That gives you the access to the alert service and the trading club, right? Here's one of my members, and actually, while he lives in Kuwait, I don't know, hopefully he's okay, I haven't heard. But he said, Larry, I have to mention one thing. I'm subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing I'd like everybody here on this webinar to know is when I get a trade from Larry, I do it blindly as time has shown me. He's dead accurate in his recommendations. Thanks for the great service. And then here's another nice testimony here from Dan. He said, very diligent and totally thorough with your analysis. That's the foundation of your success of the alerts. I paid for my subscription with the first 4 trades I took when I was just learning how to trade options. So that's pretty cool. A lot of people have done that. They come in, get the alerts, and they just kind of learn as they go. Now, with the alert service, when I send out a trade, I'll give you always a suggested option trade. A lot of members just do their own thing. So if it said go long something, they'll just go long by calls or puts, but I'll always give you an option spread trade that you can use. With the alert that comes out, you'll get the entry level, you'll get profit targets based on unusual option activity, that price target mapping I use, what option series to use, stop loss levels and guidelines. And I'm constantly updating these alerts and adjustments if you need to do that. Here's, like, for example, on Friday, had a lot of different, we had some stuff going on. Here's the some stuff that we had on Friday. I'll just kind of give you an idea what you would get with the alert. This is Telegram, free app that you can use. Here's one right at the end of the day. This was, say, profit update, the Russell. We had a Russell short currently trade around 240.44. If long, the 24 March 242, 238 put debit spread, be taking profit into the close. Heavy option open interest at the 20 March 240 strike. Potential pin at 240, currently up to around $86 a spread. So that was on that. And then I did an adjustment. We had a short on Dollar Tree. I sent out this towards the end of the day at 2:30. Said adjustment Dollar Tree. currently trading around 105.40. If long, the 2 April 105 put short, 27 March 100 put. This was a calendar put diagonal adjusting trade. So one, this is where, like Dan said, he was learning. Buy to close the 27 March 100 put for a profit, and then sell to open the 27 March 101 put, adjusted trade, now long the 2 April 105, short that 27 March 100. And then I had here earlier, I had a profit update. The Russell, the short was up 76 bucks, and a profit take options I gave you on the Russell, what you could do. The day prior to that, we had a couple of different trades on. We had XYZ on. We closed that out at a break even stop on Friday. And then we had this trade I'll show you here in a minute. We had a lot of different trades. We had the other thing we had on was the we had this I'll show you here. We had W Day. Anyway, that's what it looks like. It's Telegram. And then I'm constantly doing updated, updates for you through the day if you want, by text or by email to do, if we do an adjustment, I'll send those out. Then with this service, you get for the next 4 months, the daily video newsletter. So I review all the trades. I'll show you what I'm going to do or what we've done that day, my market outlook. And then we have a weekly Q&A every week, live and recorded. You have access to that. First trading room access during the week for the next 4 months, and discounts on anything on the website, software and courses. And so here's kind of an update of the different alerts that we do. The most that we typically will do are been with the calendar and calendar diagonals parts of the alerts that are sent out. Since the start of this part of the service back in June of 2019, we've had 407 trades closed out, 289 of those winners, 30 break even, 88 losers. Win break even rate running at 78%, unaudited. So really nice high winning percentage on these, win break even percentage. And here's one that we had set up. This was on W Day. This is what I call this was an aggressive long put because it was based on using the 4-hour time frame. Anyway, these are things that go into the alert to tell you, kind of make it as clear as I can. So you can see this was set up on the 11th of March. W Day was traded at 138, and then on the 16th we took profit. It was traded at 134.20. So here you can see it says new aggressive short, and it's aggressive because I'm using a lower time frame. Typically I like to use the daily, but I wanted to get aggressive on these shorts, right? The markets were really starting to fall apart. So it was trading at 138. So did told you what I was looking at. It's cycle high retracement reversal, and had a 4-hour negative momentum and a momentum downside cross. There's another indicator I use. Gave you the targets, target 1, target 2, 128. Know your risk. And here was the original trade setup. This was going out and buying the 27 March, selling against it the 20 March 138, 128 put calendar diagonal at around $4.55. And then on the 16th, profit stop, W Day short, trading around 134.20. If you're long the spread, make sure you locked in some profit, hold a break even stop on balance, currently up $122 per spread there. So just kind of see what you would be getting with the alert. And then here was the trade setup. And these are based on my indicators that I just showed you pretty much. And this was a daily, but this was based off the 4 hours, so you can't really see it. But you can see momentum starting to shift down. We had a cycle reversal. So went short right here and then got out a few days later on the 16th when it was trading at 134.20. It was starting to kind of shift back up. And so did that trade. That was an alert trade. Here was the original trade set up as that calendar. So got in and at $455 on that spread along that 27 March 138, short the 20 March, that was expiration Friday, 128. had the profit there on the 16th. It was trading at 134.12. So the spread went from 455 to 595. That was up 140 bucks per spread. If you did just one spread, 31% return. So you did one, you made 140. If you did 10, you made 1,400, et cetera. And that was that. Now here's one that we had. This was a really good one. This was on Palo Alto. This was one that was set up on the 4th of March. It was trading at 157.5. And then we did an adjustment. These were all sent out to you by alert on the 5th, and then took it off the 13th. We had adjusted to a long call condor. Now it had gone from 157 to 170. So here you can see when starting out, this was also an aggressive long setup based on the 4-hour. So this original trade was set up as a call counter diagonal right here at around $3.80. Adjusted this on the 5th. Adjusted this into a long call condor, and then on the 5th, that's where we adjusted on the 5th, and then on the 13th took profit, closed out the balance of the trade. So at that point it was trading at $170, and this thing was up $805 per spread, over 1,200% return. Okay, so this was a real home run type trade setup. So here was the trade entry, got in right there. Here are the indicators. Again, this is based on the 4-hour, which I don't have up, but you can see we got it right there. It's breaking that 21 exponential, cycle 1 positive. We had a cycle reversal here, got in there, and then did an adjustment on that was the 4th. The next day, the adjustment there, and then got out on the 13th. It was trading at 169.88. So that was the trade set up on Palo Alto. The first profit before we did the adjustment on the 5th, the calendar diagonal had gone from 128, now it's trading at 163.03. So the spread had blown from $380, now it's out to $691. It's up $311. That's an 82% return. But then on that same day, later in that day, we adjusted this trade to a long call condor, reducing our cost by taking a huge amount of profit from the original long part, made this into a condor. So $10 wide condor, long that 160, short the 170 debit spread, then short the 175, 185. So we had this condor structure here, and then we had the adjusted cost down to just $65 debit cost per spread, with the potential to make $935 if it went out in here. That would have been over a 1,400% return. We came close, not quite. We made it to a 1,200% return. And on the 13th, we're getting out right there. So this was at 169.88, and the spread had blown from 65 that we adjusted into. Now it's up to 888. So it was up $823 per one spread. So if you did one spread, you made that. If you did 10, you made over 8,000. 1,200% return on that. That was a fantastic trade. And then, so that was an example of that. Here's another one we did not long ago. This was on Dollar Tree, the long side. Now we're short Dollar Tree. I'll just kind of flip through this pretty fast. This turned out really nice. Got in it was trading at 128. Did a couple adjustments into a call condor. Got out on the 20th. And now we adjusted this trade into a long call condor, which is a great structure that we like to trade into. And so got in right here. You can see the entry based on the momentum indicators out there. And the profit take we had here on the 18th, it was trading here at 132.97. So the spread had blown from 345. Now that spread was out to 511, took some profit there, sent that alert out to members of 166 bucks, 48% return there. And then we adjusted the trade, booking some big profit on our long side, and then adjusted this into a long call debit spread. So that's what we ended up with, this debit spread. And so now it went from 128 now, took the additional profit on the 20th, and now it was traded at 135.11. So the debit spread that we had adjusted into at $1.10 now is at 479. We're up $369 per spread, or 335% return, on that, taking that off. Here's another one we did not long ago. This is on Chevron. This is a beautiful trade on the upside. Again, got in right here. Really beautiful trend up, got out right there. So this is a long call counter diagonal in at 157.25, out on the 23rd at 167.80. So the original trade, we had that calendar diagonal, had a little profit take there on the 9th, up $226 per spread, 92% return. Then adjusted this as well to a long call condor. This turned out to be a great one as well. So now we have this 160, 167.5 call debit spread. We adjusted that and had sold against it the 172, 180. So that's called a long call condor. This one we had into this trade zero risk. After the adjustment, we had no at risk at all. We actually had a credit of 2 cents or $2. So this had a potential, if it went out here, to make $750, $7.5 wide spread plus that credit, $752 potential profit. And I believe this one made that max profit. Yeah, pretty much max profit, 733%, $733 profit, zero risk on that, on the exit there. Here are a couple of the butterflies that we do. Now, this is one that these alerts are really high winning percentage as well. This we've had since starting this back in 2019 as well. 246 trades closed out, 174 winners, 22 break even, 50 losers. Win break even rate 80%. Now these are very, very low risk type trades. These are when the markets really get crazy. These are where we go to. Typically the long condor. We've been doing these primarily, and average maybe loss over those are $75 per spread. So very low risk. Potential profits can be 2 to 1 to 25 to 1 on these types of trades, depending on it, if the butterfly or condor. Here's one that we did not long ago. This was one, again, we did started out as a long call calendar diagonal on Apple, and then adjusted this into a long condor for a free trade. So I'll kind of go through this pretty fast. Set this up on the February the 2nd, was traded at 263. Did some adjustments on the 3rd and the 5th, and then profit take additional, close out the additional balance on the 11th. It was trading then at 278.95. Okay, so these are the different alerts that would go out to you. So got into the trade right here, adjustment here, and then out right there. Just kind of give you a kind of overview, what that would look like. So then ended up adjusting this into this long call condor, and reduce our trade cost down to $75. And so now we have the spread on, really wide spread. You can see here is at 267.5 long, 280. Real wide, $1,250 wide spread, right? Minus our cost of 75. So if it went out in this area here, max profit would be 1,175, over 1,500% return there. If that was the where it went out, and came pretty close. This one made over 1,200% return as well. All right, so it was traded at 278.99 and went from the adjusted cost that we got in to 75 after the adjustment. Now that spread had blown out to 994. If you did one spread, you're up $919. That's a 1,225% return on that trade. And then Amazon, here's one, just a straight long call butterfly that we did back in November. Trade setup getting in here on the 11th, 25th, and then out 2 days later, 3 days later. And so this was a butterfly that we were targeting up to 235, and put this on for $121 per spread, potential, profit of 379, over 300% return. And went out right here, did pretty good on this trade. This was a very low kind of risk trade here at 121. So spread blew from 121 up to 318. up $197 per spread, only 162% return. Looks pretty small after you look at those huge returns we've had on a couple of those. And so that's a look there. And then these are some fun ones that these are very selective, but these are the other types of trades that you might get through the alert service. Here's one that we did on a GLD, put butterfly pin trade. Here was sent out to all the members. This is what we call kind of a binary trade. You're just going to risk the debit paid, and we're looking for a potential pin. So I'll just flip through this. So got in right there on the 3rd of December, straight at 387.90. We're looking for a potential pin at 400. So this was the trade sent out. This trade had a total risk of 25 bucks. So that was your risk. Okay. So if you did one spread, your risk is 25 bucks right there. And we were targeting 400 for a pin. So it was a $4 wide, $400 wide spread. Cost of the trade 25. Potential if it was to pin at the top of the tent, 375, 1,500% return there on that risk of 25. Got pretty close. It was traded at 399.74 right there. So this spread turned out pretty good. Went from 25 bucks to 331. So up $306 per one spread. If you did 10, you're up over 3,000, 1,200% return there on 25 bucks. And here's just one more. This was one we had on SPY for a put butterfly pin. And this was back, it was traded at 573. We were targeting down to 560. And so this one had a profit. This was over 1,000% return. So here's the trade setup right here. We were targeting down to that 560 area. And we did this trade for a total risk of 39 bucks, $5 wide spread, put butterfly. So $500 cost of the trade, potential to make 461, over 1,100% return. And we got pretty close on this one too. Right there at 360.32. So it's up $417 per spread, over 1,000% return. So those are, what you can be looking at. And that just kind of gives you an overview of everything. And I appreciate everybody being here. If there are any questions, let me know. Please use that link again. And then use that promo code SEA15. And I'll see everybody next Friday. Okay, so package one, option one, today 167 bucks. Or package one, option two, if you want the indicators and all the bonuses, today just add another $30 to it, 197. If you want the alert service with the option one, with the extras, it's going to be 507 a day. There's two pay. If you want everything, just extra 30 bucks with the alerts, 537. And here's just kind of summary of what to be looking for next weekend. So again, thank you everybody. I appreciate your time today, and have a great rest of your day. And I'll see a bunch of you next week and next weekend. Ciao, everybody.